All right, y'all, back to work. Boy, pretty darn good day today. Got that beautiful retest trade we talked about last night. And man, oh man, this afternoon, right? That soft bond auction, all hell breaks loose this afternoon. All kidding aside, though, getting ready for tomorrow. We got a big day coming tomorrow. Last full trading day of the week before the holiday coming up this weekend. And we have a very simple game plan for tomorrow. We have a big move higher on the hourly chart and a big move down this afternoon. Long-term bullish, short-term bearish. That tells you one thing. That means bear traps are probably where the money is made tomorrow. Now, bear traps come in lots of shapes and sizes. I've got 3 bear traps on my radar for tomorrow. I have no idea what tomorrow will bring, but I do know, though, that 1, maybe 2 of these bear traps are probably going to pay on Thursday morning. So I want to cover entry tactics, to time the entries, exit tactics to make some bank before the holiday weekend. So enough of the intro right now. Charts are ready. Let's dive in and have a great day tomorrow morning. It's been a fantastic week so far. Charts are pretty darn good tonight. S&P SPY ready to go tonight. NASDAQ triple Qs are always ready here on these videos. I got 4 clues on these charts tonight that are telling me where I think the winning trades are waiting for tomorrow. 2 of those 4 clues are right here on the hourly time frame. What do you see right now on the S&P and SPY? We saw one of these, a week ago, right? That is a spike in channel. Now, what do spike in channels tell us? They tell us the money's made below prior swings around the base of that channel. We're pulling back right into that sweet spot on a spike in channel. That's one big clue on the S&P. Look at that NASDAQ right now. You know what that looks like, right? If you're a student of mine, or if you've gone through my free trading classes, what does that look like to you? It's a range, baby. And what do ranges do? They love to rotate back and forth from top to bottom. So both the S&P and NASDAQ, they're in a primo spot right now for some bear traps, rotations back higher. I will say one thing though. Look at the S&P right now. The S&P has that 58.35 and 3/4. That's the very base of that spike in channel. On the NASDAQ had that range right there and that breakout pullback level. I would keep these on your radar here tonight in the video. We'll talk about this a bit later on tonight. 29.96 on the NASDAQ, 58.35 and 3/4. Remember those. We'll talk about those a bit later on in the video because there may be some more downside movement here. We're going to cover that in a moment. That's 2 out of 4 clues for tomorrow. I've got 2 more clues over on some tick charts, some faster time frames that will help us time some entries for tomorrow. Before we do that though, let's check schedule for tomorrow. There's 3 things on my mind for tomorrow. First things first, we're supposed to hear about a House vote on the big, beautiful bill that's working its way through Congress right now. At some point tonight, I don't know when it will be tonight, but at some point later on tonight, there will probably be some headlines about the House vote tonight. I don't know when it will be or what it will be or how the markets will react to that. So just be aware of that. That's one thing we're watching overnight. Tomorrow, the big news for tomorrow is that PMI composite flash. It's pretty much the only news we've seen all week this week, right? So that's our big number tomorrow morning at 9:45. And the final thing to be aware of for tomorrow is tomorrow night, I'll be out of the office tomorrow night. Got a holiday weekend coming up. There'll be no video newsletter posted tomorrow night. We'll come back on Tuesday, right? Resume our normal schedule after the holiday on Monday. So again, House vote coming tonight. PMI composite tomorrow, and I will miss you guys. I will miss you guys tomorrow night and the rest of the week here, ahead of the holiday. Wishing everyone a very happy Memorial Day weekend. Now, let's get back to our charts, though, because it's good to know when the news is, but we all know by now, at least should know by now, the money is made on those charts. Let's now dive into those tick charts right now. The first clue on the S&P was this beautiful spike in channel. And we saw one of these, late last week, middle of the week last week. These work very, very well. But you know what, though? We're not going to trade off time charts, especially not a 60-minute time frame in our trade room. Tick charts are always the easiest to time the entries. If you're watching for the first time right now, by the way, all the time frames, that's a 7,000 tick chart, upper left-hand corner. And that, my friends, is the only indicator you need to make lots of consistent, dependable money. That is the 21 EMA. What do you see right now? I see 2 clues on the tick charts right now. One clue is a range breakout. Had that range right in the middle. Now, why is a range breakout important? Because what do ranges do? They love to break out, pull back, and take out that low. That's a big clue right now. We should expect some resistance, some bears to enter around that breakout pullback zone. But arguably, the biggest clue right now is this big move down. Now, why would that be important? Well, because whenever we have a big move lower in an overall bull market, we know that all of that momentum going lower is going to make this market want to pull back, retest that low, and once it retests the low, then it will be able to much easily now resume that overall bullish trend. So you combine these all together. We're overall bullish on the hourly, range breakout, big move down. There are 3 different types of bear traps I am looking for on really both the S&P and the NASDAQ for tomorrow. Let's cover the first one. The first one is kind of the easiest one, and we'll go a bit more aggressive on this as we go later on in this video. I mentioned earlier, this is the first of 3 for tomorrow. I mentioned earlier, we expect this to want to go up, retest, and back up from there. So during that pullback, I need to use a very specific entry pattern. I teach this in our free video classes. It's a technical bear trap. It's very simple. I want to see higher highs in price, and I want to get in underneath a prior swing. Higher highs in price, underneath a prior swing. As this pulls back right now, bears get short. Bears get short. They're selling after a big move down. This is not a great place to be selling. Higher high in price, underneath a prior swing. Now that will be a theme tonight, okay? Getting in underneath prior swings. That will be a common theme in tonight's video. We'll talk about this to go deeper here into the video. Now, I would love to say I have a lot of confidence in selling that pullback right there, but I don't. Why? Because we're not bearish on the hourly time frame. There's a very good chance this keeps on going, and I will talk about that game plan in just a moment. One of my favorite trades though, and you know this already if you watch my videos, if the bears come in and whack that sucker back down again, and again, they should, right? They really should, but the odds are not that good on it. So again, I don't feel comfortable shorting that pullback. We'll talk about that a bit later on in a moment. Once we get the retest trade, if you watched last night's video, you know this already, right? But anytime bears sell here, their profit targets are going to be where? Down at that low. Sellers up here become buyers down here. This is a horrible spot to be a buyer. If you bought the retest on the NASDAQ today or the S&P this morning, you know what I'm talking about. So this is a great place for a bear trap. Now pay attention. This is a little bit more aggressive of an entry. I can be a lot more aggressive on this one because now I know where that bottom is. Okay, what I mean by that is now all I need is signs of exhaustion. So bears try once, bears try twice. Think about now where their stops are. I'm going to use those stops to squeeze those bears out and run this thing higher now. Okay, now watch closely. Very important here now. At this point, this now has completed the kind of the mission, right? They pull back, they retest the low. We should be green light now to make another big leg, resuming the overall trend on the hourly time frame. So knowing that, now what I'm going to do is start to add to my winners. If you want to make a lot more money in trading, guys, promise me this, add to your winners on these retests. Very simple. Shallow pullback. This is the key. Okay, this is the key. Shallow pullback because separation moving average is strength. Higher high in price, get in right below that low. Right? This is the sequence I look for, one of 3 bear traps, whenever I see a big move down, overall bear market. Buying as low as I can with a technical bear trap, trading the retest, 2 tries, a bear trap of the low, and adding to the winner as it snaps back up and resumes the overall trend. That's one of 3 bear traps I'm watching for tomorrow. Now, the second bear trap. What if we start ripping, right? What if this thing rips? Again, we're right at the base of that spike and channel. What if we get some good news overnight and this thing starts ripping higher here? These can be tricky. There are 2 types of bear traps I want to see if it just runs back higher. I'm going to cover that more detail in just a moment. First things first though, if you're watching this video right now for the first time tonight, this might be way over your head, a brand new language, a brand new strategy. I know most folks watching, you guys know these patterns already. you're making bank on these already. But if you're watching the first time right now, the markets are way too good right now not to be making consistent profits. I teach all these entry setups in my free trading course. What I'll do is I'll put a link up top here for you, upper right hand corner. Hit that link that popped up there and take that free trading course, because the strategy I teach in that video series will teach you a stupidly simple trick we use in our members trade room each morning that literally tells us exactly where the winning trades are going to be each day. You will laugh how simple that technique is. More importantly though, I want to teach you my 4 favorite entry setups so you can start timing better entries, get your confidence back, get some consistency in your trading. Guys, bottom line, if you're missing the best entries right now, if you've lost your confidence in your current strategy, do me a favor, hit that link that popped up there, take that free trading course. Everyone loves all the trade examples I include. I have a ton of trade examples of bear traps, add-on trades, retest trades, all included in that free video course. Best part is it's completely free for you. Also, to be aware too, guys, I'm going to put all the important links you'll need to learn this roadmap, learn the entry setups, time better entries. Most importantly, get your confidence and consistency back in your trading. Guys, most folks start making money all on their own, all from that free video course. So grab the link up there or down below the video tonight, the description. And don't forget too, I post a ton of charts and videos and mindset stuff on Twitter, or X they call it these days. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn the strategy, time better entries, start making money all on your own are all linked up below in the video description. Now, where did we leave off here? Yes, we talked about the first one, the pullback, the retest, and the go. Let's now talk about here if we make a big run going higher. Okay, there's 2 scenarios I'm looking for if we make a big run going higher. The first one is a pop and grind. We may pop up and these bears may get smoked and they may start grinding going higher. Okay, these are very simple. I'm not going to chase after it. I'm looking for a bull channel. Mark that trend line off the highs, bring that channel down around the low. And I talked about earlier how a main theme tonight would be getting in underneath prior swings. This is the most important part about these next 2 trades. I want to be getting in under prior swings, I'm telling you right now, whenever an overall bull market makes a strong run down like this and pops up off that low, we call these V bottoms in our trade room, the best entries are always going to be underneath prior swings. It's a very important theme if we do V bottom off of that low. So if we do make that run back up, we start popping up and grinding going higher here. The key will be now 2 things. Find that new channel off the highs, down around that low, and again, focus on getting in around the low of that channel, right below a prior swing. That is almost always where the money is in a V-bottom scenario like we're seeing potentially for tomorrow. The other variation of that is, and again, this would be our second type of bear trap for tomorrow, the other variation is if this thing just rips and runs higher, my main focus now will be look for basically a 2-legged pullback, but get in underneath these prior swings. I can't emphasize how important that part of this is. Whenever we see a V bottom that bounces like that, it's almost always underneath those prior swings. What I'll do on this is look to find some new channel by connecting off recent highs, back around that low, get underneath that 21 EMA, trap those bears in, and squeeze those stops with a bear trap, with a potential add-on. Remember, these add-ons, you always want to get in that separation, higher high. A lot of examples of these in that free course that I mentioned earlier, right? So if it does jump off that low, that's number 2 for tomorrow. My goal is get in underneath prior swings around the lows of those channels. If it really blasts up, think 2-legged pullback, right? Measured move off that high at the low of that channel, low prior swing. That's usually where the money is made in a situation like that. That's 2 out of 3 types of trades I'm watching for tomorrow. The third one might just be the most advanced, but it has the potential to be the biggest winner for us. The third one's a range down here. It's a holiday weekend. Everyone's waiting for more information about tariffs and trade deals and yada, yada, yada right now. We may wind up going sideways here. Now, why would that be a big clue? Why would that be a third trade for tomorrow? Because what do ranges do? They're magnets and they love to rotate, right? They love to rotate with things like expanding triangles, with things like pendulum swings, right? Symmetry below, symmetry above. Okay, if you understand that basic principle behind ranges, and if you've taken my free video classes, we do a lot of range trading in that free video course. The bottom line is there are two ways in which I want to trade this. First one is, and again, I mentioned earlier that 58.35 level, those key levels below us on the hourly time frame down here. If we make a run lower, we're so far down now. Overall bull market, this is a beautiful spot for one of those slingshot reversals we've talked about in last night's video. As we pull back now, bears once, bears twice, bear trap those bears in, squeeze those stops, running higher. And remember, what do ranges do? They love to rotate. The amount below, the amount above. In this case, add to that winner, separation off the moving average, higher high in price, and we add to our winners as it rotates back up again. Now, second part of this is very important right now. If I see this thing, if we start to really blast through that pendulum swing, this will almost always look like something like this. It'll blast up and it will begin to separate off that moving average and grind through. In the trade room, we always say convincingly, right? It'll be a convincing break through that pendulum swing. Okay, we're not going to buy into the pendulum swing. I want to make sure it convincingly breaks through that pendulum swing. That will tell me now it's a breakout. What do ranges do? They love to break out pullback. Once I get that valid breakout, once I start seeing that separation off the moving average, a clear break of that pendulum swing, then I start looking for a way to buy the breakout pullback. Makes sense, right? What was resistance now, the top of that range, that now becomes a key area of support. And as always, I love to time entries by running stops. Get below that 21 EMA, bears once, bears twice, squeeze those stops in. And again, after that failure pattern, like I teach in the free video course, it's always going to be adding to our winners, rinse and repeat. Once you learn these core setups, once you learn the bear traps and the add-ons, we really just simply keep applying these the same way, but in a slightly different situation, right? Each time there. You'll learn this stuff, by the way, in the free video course. So these are two scenarios I'm watching in this third type of bear trap. It's below the range, snap off that low, and we'll see if we get that squeeze going higher, break through that pendulum swing, and then go in and add to it, right? Buying the breakout pullback and buying that bear trap for there. I want to go to the NASDAQ here next. But don't forget, we may go sideways in a range. We may go up first and then back down. So think about that rotation, right? Up above, down below. This will feel very bearish right now. It will feel like you're doing it wrong. That's not the case, right? It's a range rotation. It's an overall bull market right now. Same basic idea. I just want to make sure you know that if we go higher first and then back down, when that voice in your head says, are you sure you want to buy this? Yes, I am. Unless this thing holds that pullback and really blasts lower. If that happens, we'll cross that bridge tomorrow once we get there. But in most cases, though, again, we're way down right now after 2 straight weeks after that trade truce. We saw, 2 Sundays ago. We're nice big pullback right now. This is a beautiful spot right now for a bear trap. So just be aware of that small wrinkle, right? That small adjustment right there. If they go higher first, measure it down below. I would love that bear trap and same game plan from there. All right, let's now go grab the NASDAQ here right now. The NASDAQ is somewhat similar, but you'll see right away that the NASDAQ is a little bit different there than the S&P. Over in the NASDAQ right now, look at this beautiful range we're seeing right now on the NQ. You know me, right? I love range-bound markets. So we definitely have that rotation back and forth again. And again, you can see, like on the S&P, we may still have some room to go lower. There's that 29.96 level. Do not be surprised if we go a bit lower tomorrow, then make that run back up to the side of that trading range. So I want to dive into the tick charts here. Before we do that, though, if you're enjoying this video here tonight, please do me a favor. Do me a big favor right now. Hit that like button for me. Make sure you subscribe. I know we're all busy people these days. I know it's a couple days before a big holiday weekend coming up. I appreciate you guys stopping your busy day, watching my videos here tonight. So thank you so much for all the likes, the subs, all the ongoing support down in the comment section below. But enough begging for likes and subs. Let's now dive into our tick charts here right now and talk about the game plan for tomorrow. Same big clues. There's that 996 area down there, right? We saw earlier on the hourly chart. What do you see right now? Well, there's two ranges, right? There's one range right there. So we know that will be your breakout pullback zone. A lot like we saw earlier on the S&P. But look at the range we're seeing right now. This range could easily be that rotation going higher and that breakout pullback. So a little bit of adjustment there on the NASDAQ, but a lot of this is very similar. Do not be surprised here if we go lower overnight, get that technical bear trap off that low. Now remember, on these, it doesn't need to be only 2 tries. As long as we're getting those higher highs, the higher highs are the key right now. The goal is, though, is to get in underneath swings for that run going higher. Again, I wish I had more confidence in to sell that move back down, but it's an overall bull market, so I don't take those trades against the overall direction. If it does rip higher, right, that's that second scenario we talked about earlier on the S&P. Let's imagine, though, now we get that run going high, nice easy winner for us tomorrow morning, then we come crashing back down, retest trade. Remember, on a retest trade, I can be a lot more aggressive, right? It's signs of exhaustion. Bears once, bears twice. I wouldn't argue about a technical bear trap. A technical bear trap would be fantastic. I don't need it, though. Not on the retest trade. The retest trade, I already know where profit targets are now. I already know where that bottom is now. I'll be a lot more aggressive on the retest trade. Still don't want to buy the bottom. I'm going to wait for those bears to try twice. I'll trap those bears in and squeeze those stops back up again. And again, remember, on the retest trade, do yourself a favor here and get in the habit of adding to your winners, right? On that retest trade, that separation, that higher high, and back up. That's one of 3 bear traps for tomorrow. The other would be, of course, do we pop up and begin to grind? We find that channel off the high, off that low. And again, as I said repeatedly earlier in this video, I can't emphasize how important it is in these V-bottom scenarios. Go back and back test this yourself. Anytime you see again, bullish overall on the hourly, V-bottom on the tick charts, the lower time frames, you'll see for yourself, everybody piles in below those prior swings. This is always where the money is made in a V-bottom. And if it really rips higher, if it really races higher here now I start watching for 2-legged pullbacks usually, but the key is getting in, right? Getting in below those prior swings. I'll go out to find some larger channels off those highs and time the entry off that low. And unfortunately, I can't teach everything in these videos, but I will teach you guys the entry tactics, the bear traps, the add-ons, the strength moves as we go higher. A lot of examples of those in the free video course. So make sure you take that. Links, of course, below the description of this video. And the final one is the range. A bit more complicated. You know, a lot of folks don't do well with ranges, but once they learn how they work, these are my favorite. These are my favorite types of markets because ranges love to rotate. So range rotation, break it down, get into that key level down there, trap those bears in, and what do we call these? Slingshots, right? Slingshots. We're bullish overall with a bear range. That's the recipe for a slingshot reversal. Again, bear trap starts off the party going higher. We separate off the moving average. That gives us the green light now for the add-on. And we know now where the market wants to go. It wants to rotate off that low up to that high. Do we get crushed back down again? Well, we'll take our profit off at the top of that pendulum swing. Or do we continue through that pendulum swing, right? Do we go through the pendulum, do we go through that pendulum swing now? Do we start grinding? Do we start separating off that moving average? Are we convincingly pushing through that pendulum swing? If that is the case, we now look left. We find some of those prior highs back here. A lot of times they're a bit higher up above that range here, and we start watching for that breakout pullback off of that low, right? A very easy game plan. And if we're lucky, there'll be a pop and grind channel off that high, off that, I mean, come on, right? We get something like that. There's very few guarantees in anything in trading, but I'm going to tell you right now, that's almost a guarantee winner if we can get that strong rotation off the low, separation off the moving average. Remember, separation is strength. All that strength now, they pull back the low of a bull channel. I mean, come on, right? That has payday written all over it off of that low. Right, guys? Those are 3 different variations of bear traps on my radar for tomorrow. What do you think? Am I crazy right now? Let me know in the comment section below. I'd love to know how you plan to trade this tomorrow morning as well. Anyways, that's the game plan for tomorrow. Now, speaking of tomorrow, I can't think of any better way to learn to trade these markets than to do it with us every morning at the opening bell. I'm going to put all the important links you need to learn the strategy, time better entries, get your confidence back, start making money all on your own, and hopefully I'll see you sometime soon trading with us as a member of the Morning Trade Room. In the meantime, guys, be well out there. Have a very safe and happy holiday weekend. And whatever you do, be here next time. Adios, amigos. Bye for now.